Hello guys. Welcome back to another video. Welcome back to UCFX. Yeah. So before we proceed to what we have for today, please, if you are new to the channel, please hit the red subscribe button and turn on the bell notification button so that I'll be encouraged to be creating more contents like this. And as well, you will be among the first to be notified whenever I release any content like this. So without further ado, let's get it started. Yeah, how to get sniper entries. Yeah, you must have been using like 40 pips stop loss, 50 pips stop loss, getting stop out of the market. You want to use those 5 pips stop loss, 10 pips stop loss. Yes, it is very realistic. Yeah, you can achieve that. Just stick to this video. I'm gonna break it down, every single rule that you need to take to get the sniper entries. Stay tuned. Okay, yeah, so here we have on our screen the rules to taking this sniper entries. So I'll be breaking all of them down one after the other. So by the way, in case you are new to learning the smart money concepts, I will be placing in the description the links to the videos that I've created, a well-detailed information about the smart money concepts, everything that you need to know, the A to Z video. I've compiled it. You do well to check it out. There are actually 5 episodes, so I'll be placing the link down in the description. But in case you already know much about the smart money concept, let's continue in our video. So yeah, the first rule that we have here is the market structure. Yeah, before you actually start taking trades, you need to actually know what the market is saying. You need to check out the market structure. You need to consider the monthly time frame, the weekly time frame, down to the daily time frame. So you need to do this to actually understand and know the direction that the market will be taking. And after that, you need to check the recent other blocks that has formed in the market in direction of that movement. So as well, you need to mark out breaks of structures. You need to check out liquidities to understand where traders are trapped. And as well, you need to check out the discount levels using the Fibonacci. And as well, the last but not the least, global time frame confirmation. You might be confused. I'll be breaking all this down as we hit inside the chart. So here we have on our screen, we have the Kiwi dollar NZDUSD. So from the first rule, which is the market structure. So we need to understand the market structure. We need to know where the market is actually heading. So that's actually the first rule. So we go up to the monthly time frame to understand the market structure. So here we are on our daily time frame. As you can see, the market is actually making lower lows and lower highs. After market broke this structure, it started reversing. The market came back, mitigated this other block, went back, grabbed another block right here, and it's actually heading down. So right inside this area, the market is bearish. So if you go down to the weekly, the market is bearish. So here on the weekly chart, as you can see, the market is actually bearish. If you go down as well on the daily time frame, you will see as well that the market is as well bearish. So after identifying this market structure, you need to then find the recent formed order blocks. Yeah, so you need to find the recent formed order blocks. So after noting the market structure and identifying the directional bias of the market, as you can see, this market is bearish. Just like I said, we had a break of structure right here. So we had a break of structure as the BOS. So what next? You need to consider this range from this top to this top, from this top to this bottom. So we need to actually consider this range. So in this range, if you go down to the 4-hour time frame, you will find an order block inside this range because we had a break of structure. So you need to find another block we need to find the order block that broke this structure, so that we can check if that order block is going to work. So if you go down to the 4-hour time frame, you would agree with me that we have a nice order block right there. So we will mark that out. So there we have our H4 order block. We have our H4 order block. So after the formation of this order block, you will see that it's actually this order block that took out these lows. So we had a break of structure. Then what next? Liquidity. Let's go down to the 1-hour time frame. Here on the 1-hour time frame, you would agree with me that we had liquidity inside this area, because traders or less informed traders were actually going short from this area. So this is liquidity because they were trapped short. Yeah, the smart money used this liquidity above this area to push this market inside this order block to mitigate their order, because prior to this movement down, the smart money loaded some buys, so they need to come back to close those buys, because those buys are actually on a drawdown. So what they need to do, they need liquidity to actually go back to this order block. So here we have this liquidity. Traders were trapped short, and after that they tapped into this 4-hour order block. And after identifying liquidity, what next? You need to check where price is sitting at. You need to be taking your shorts or your buys from discount levels. Nobody wants to buy at premium price or equilibrium price. The smart money are always interested in the discount prices. So you take your fee from this point down to the range. As you can see, price nicely came to our discount levels. As you can see, our discount levels are 0.618 of the fib and 0.786. So whenever price comes into this area, you need to start looking for either sells or buys. So here we have price tapped nicely into our discount level, the 0.786 of the fib level. So after checking and identifying where price is at, what next? You need to use lower time frame confirmations to take this trade. What do I mean by lower time frame confirmations? Here we have H4 order block, which means we need to go down to the H1 and 15 minutes time frames to consider this, to take this trade. That's where we actually get these sniper entries. Assuming the order block formed on the daily time frame, we will be using the H4 and the H1 as your lower time frames to confirm the daily order block. Just the way, just similar. So just like the same way, if you had a 1-hour order block, you need to go down to the 5 minutes and the 15 minutes time frame to confirm it. So it just goes on just that way. So here we have our H4 order block. So we need to use the H1 and the 15 minutes time frame to confirm our entries. So, and this is actually the last rule, the lower time frame confirmations. So what do we need to see in the lower time frame before saying that the trade is going to go in our favor? So we need to as well mark out a lower time frame order block, just like we had marked out here in this 4-hour time frame. So we need to go down to the H1 and the 15 minutes time frame to find other blocks inside this area, and as well we need to find break of structures. After that, we need to see liquidity formed before tapping into that lower time frame order block. So this might be confusing, but I'm here to actually help and make you understand it. Yeah, as you can see as well here, we have liquidity. we have a trend line liquidity, as you can see. So prior to this movement, you need to understand and know where liquidity is as well at. After taking out this liquidity, the smart money as well created a trend line liquidity. So most traders were actually going long from this scenario. After taking out these highs, after the traders that were going short were taken out, they created this trend line liquidity. Traders started going long, and as you know, we already have our H4 order block, which has been mitigated. So the smart money are now interested in sales, and at the same time they have created liquidity to bring in buyers so that they can take them out as well and add their sales so that the market will go in their favor. So as you know, in the forex market, before you buy, you need a seller to buy from. So whenever you see a seller, there must be a buyer. So they created this buying scenario for less informed traders to think that the market will be going higher, but they are in the other way around, entering short. So we have a trend line liquidity here. But that's not really the case here. We are interested in finding a lower time frame order block. So let's go down to the 15 minutes time frame. So here on the 15 minutes time frame, let's take this out first. I think I'll be creating more videos to explain liquidity. So just subscribe so that you know whenever I publish these videos. You might be confused when I said about what I said about the trend line liquidity, but that's not actually the case. If you focus, you will actually understand all this stuff. So here on our 15 minutes time frame, you can see after price tapped into our H4 order block, we had a nice order block that formed inside this area. So we had a nice order block that formed inside this area. So after that, what next? You need to look for break of structure. As you can see, this is the last low we had here. After that, we had the market started trending down. As you can see, we had tiny break of structure. So if you go down to the 5 minutes time frame, you would as well see tiny breaks of structure. Price as well broke this structure. So we have a nice break of structure. Then after that, you need to wait for price to come back to this 15 minutes order block. So M15 OB. So you need to wait for price to come back to this 15 minutes order block. Prior to that, you need to see liquidity taken out, just like I normally say. That's the I think the fourth rule, if I'm not mistaken. So you need to find liquidity. Where is liquidity? Where are traders trapped? So some traders actually started taking shots, maybe somewhere here or here, and it got taken out. So we have liquidity here. Here is our liquidity. So you will mark that out as liquidity. That's our liquidity. And after that, you need to know where price is sitting at. So you take your Fibonacci from the highs to the lows. As you can see, price nicely tapped in again into our discount level, the 0.786 of the Fibonacci level. So all the rules have been met. Right from the market structure, the market structure is bearish. We have identified break of structure, the recent order block formation, and after that, we waited for price to come back to our order block, and before price came back to our order block, we saw liquidity being taken out. Then when price came back to our order block, price typed nicely into our discount level on the higher time frame. Then what next? Lower time frame confirmation. We then came down to the lower time frame. We marked out the same thing. Order block formation, break of structure, liquidity, discount level. Then what next? So what next? As you can see, if you go down lower to the 5 minutes time frame, you would as well spot a nice order block inside this area. Yeah, I know this might be confusing. If you go back and backtest this, trust me, you would understand it more. The secret behind understanding all this stuff is backtesting. Go back to your trading view or whatever chart platform you use to analyze your charts. Go back, backtest it. You will see everything working out nicely. So if you go down to the 5 minutes time frame, you would as well spot a nice order block inside that area. So let's mark this one yellow. Yeah. So if you go down to the 5 minute time frame, you will see a nice order block. As you can see, it had a nice order block formation again. We had the same stuff. We had a break of structure in this area. We had liquidity taking as well. As you can see, early traders that started going short, they were taking out. After that, price entered again into this 5 minutes time frame. So into this 5 minutes order block formation. So this is where we will be taking your entries from. So if you grab your tool, then your stop loss will just be above this M5 order block. So as you can see, we have 5 pips stop loss. Isn't that amazing? Yeah, it is. So what's our take profit? Where are we to target for our take profit? So you go back to the higher time frame to note the last low that formed in the market, because that's where the market or the smart money would target next. So here we have this our last formed low, this area. So if you check that from this place to this point, targeting these lows, we'll be getting 134 pips. That's actually 1 to 25. That's huge, bro. So this is just all about sniper entries. As you can see, zero drawdown. The price came back straight from that area down to this. As you can see, price continued after that as well. So I could go on and on marking out these stuffs, but just go back, do your back testing. You will understand more about this technique. So that's all for this video, and I hope you subscribe, turn on the bell notification button to be getting stuff like this. In this way, I'll be actually be encouraged to be creating more videos. Yeah.